Okay, in this video, I want to cover the views on the dollar that I have at the moment. Currently, I have three different views. Two of them are quite well known among Elliott Wave traders, and the third one is one I'm starting to prefer that I have not seen talked about publicly, based on a more bearish view. So let me go over the three pairs. Now I'm going to put, or the three ideas, I'm going to put the timing in the description box below so you can skip to one and avoid having to listen to all of this if you don't want to. So the first idea has been the one I've been running, that a major high is in the dollar back in January, at the beginning of January this year. The view is that the 2008 to 2017 January bullish cycle in the dollar is finished and a new bearish cycle has begun. And the view is essentially that we are working in wave 3 down of the first segment, and we're looking for a fourth wave bounce, a fifth wave perhaps, and then a bigger correction before another big sell move. That's been the main idea I've been running lately. And the count I've been running off of the DXY here is that we're in wave 3 of this segment. However, it keeps extending. Let me actually go over the other, let me go over the flat idea first. So the first idea is that we have a major high and the first leg of a down move has begun. The second idea is that we are working a big flat fourth wave correction here, in that it's three waves here, and three waves here before making another bullish high above 104. So that is the second view. And the third view is the one that I've been working on in the last, 48 hours maybe. I wrote about it on Twitter, and that is a much more bearish view, in that we have a significant bearish monthly divergence, which I'll go over, and that this move here is essentially not going to stop. It's only going to have minor corrections over the next 12 to 18 months, and we're going to see a massive mostly vertical decline in the US dollar, almost like a collapse scenario. It will correct and it will bounce, but they will be relatively minor, rather like US dollar, Canadian dollar that we've been looking at in the past 3 months. So I'll go into the first idea now. The first idea is that there's a major peak here. I'll show it on the monthly. The major peak is that we've had 5 waves for wave C into January of 2017, completing the bullish cycle. This is my preferred view, and that from this high, we had bearish divergence on the monthly, which is very significant. I'll go over that more in the third idea. And we are now currently running in wave 3 here, as you can see on the monthly chart. So we want to find a wave 4 bounce in this region, and then another new low, and then a bigger 3-wave correction for a larger third wave. Now this is still the most likely view, probably. It's certainly, I'm not sure actually if it's the most popular view. It has been my preferred view that we have the peak in place. Now on the daily time frame, I'm looking at this in third wave down here. And I've been trying to find a low recently, ever since about here, I think, mostly. Now I'm going to write why I think I'm going to write about the problems with this idea. Okay, the first problem is that it's become too steep. It's becoming very, very steep. It's becoming like a vertical move already, and that is not suggesting an end to the decline. Usually in fifth waves, you get a kind of jagged end to the decline. For example, you get an ending diagonal, or we see a triangle thrust, a thrust out of a triangle, which signals an ultimate move before a reversal. And those moves can often be quite brief, and contrary to that, it has the look and the appearance of a very vertical wave. So the problems with the current idea: too steep. It's not looking like a third wave is ending here. The second problem with this idea is that it keeps extending. Every time I try to come up with a count, it continues to extend and morph and keep pushing, and that is making me think that we are getting a more bearish view here. So all the counts I had before keep getting broken to the downside, and it keeps implying, just like US Canadian was doing, and briefly to a lesser extent Euro New Zealand, I'll go over both pairs later, it keeps suggesting that there's a more bearish view, just like we saw in US Canadian. Third issue with this idea, with the first idea, the third problem with the first idea is that all news, all US news is bearish. This is what you typically get in very trending moves. For example, in a very bearish trend, all news releases, all data figures will be interpreted bearishly, and they will force bearish price action. It's the opposite in a bullish market. In a bullish trending market, all news will be taken bullishly and will act as an impetus for the price to continue on. But here, it's very bearish. All data figures in the US, even positive ones, or ones that could be interpreted positively, have been bearish. And that is another thing that's making me think we got a more bearish view going on here. And the fourth thing, it's not really a problem with the idea, but it's something that works into very bearish scenarios, and that is the market is so oversold that it crashes. Now you get different kinds of crashes. You have, for example, like tech bubble crashes back in 2001, where you're starting from a very elevated, lofty position and it keels over and pukes. Then you get kind of flash crashes, which basically surprise everyone, and they're unannounced and unpredictable. And you get crashes like oversold crashes, where the market is so worn out and trending down and so tired that there's a loss of faith and a loss of conviction in it, and it simply crashes. And I talked about this about 2 months ago, and I said we are not in that position yet, but we are now entering that position. So these first 3 points are things that are making me doubt the idea that we are simply in an end to wave 3 here, or even wave 5, and we have something more bearish. And the fourth one is more of a warning, and that's oversold conditions do lead to crashes. So those are my 4 views on why the first idea is not, or rather why I'm doubting the first idea. Specifically, well, the first 2 are key. The look, this does not have the look of a wave that's ending. What this has the look of is a big third wave down. And the fact it keeps extending and crashing all my counts makes me think it's something more bearish. So one big thing I'm going to write here, and I'm going to come back to this too, I'm going to leave this on the chart. There's no evidence of an end in trend, which means that there's no reason to buy. Ignore horizontal support levels, ignore anything unless you get a 5-wave impulsive turn in the market. There's no evidence of an end in trend, so there's no reason to do anything except sell 3-wave corrections and look to the downside until there's proof of a turn in the market. And even if there is proof, I'm still going to treat it as a 3-wave correction only. The bears seem very much in control of this. So that is the end of the first idea. The first idea is that we are somewhere near an end of wave 3, and we need to have a wave 4, and then a wave 5, and then a bigger correction, and then a big move down. But I'm doubting that. I've been starting to doubt that, and in the third idea I'll explain why, because I have a lot of pairs to cover. So the second idea is that we are looking at a wave 4 flat. So wave 5 is going to end up being at a new high. So 3 waves here for W, 3 waves for X, and a 5-wave decline for Y, for a big wave 4 flat, and then a new high above 104. That is the bullish scenario. Now, that is not a scenario that I think is likely, but it is possible, and I cannot rule it out. There's no way this can be ruled out. There are lots of ideas. They cannot be ruled out. They all have incremental, fractional openings and possibilities. Have to go with what's likeliest and what has the best edge. This flat idea, first of all, there's no proof for it. It's just an idea. You can think about this if we get a 5-wave decline and then look for a wave 4. But until then, it's just an idea, and I think it's quite unlikely. Now, the reason why I think it's unlikely, I've got a few points to go over on this. Again, I'm going to write them out again. First point why I think it's unlikely. We've already had wave 4. This was wave 4 here. Now, keep in mind, wave 2 was a long-winded sideways move, and wave 4 was a flat. Or perhaps you could call it a 3-wave correction, actually, but I'm going to call it a flat as well. Now, this is the time waster, and this one has a slightly more vertical look. They are not perfectly disparate and contrary, in the sense, you get a sharp one and you get a sideways time-wasting correction. They are not perfectly alternating, but they are alternating enough. Now, the thought that this whole thing is going to be a big wave 4, it's possible, like I said, but I think it's very unlikely. The people who are running this idea that this is a big wave 4, the Elliott traders who are running this idea, they are the ones who missed completely the bearish view here. It's the traders who have missed the trade who are now sticking to the bullish idea in the dollar and who are not adjusting. They were bullish up here, they were bullish here, they were bullish here, and now they're bullish here. And they keep coming up with new reasons for it. For example, I can show you on Euro US dollar too. Remember the big fourth wave triangle? Everyone had this idea. Everyone had this idea, and I think it's correct. You have a 5-wave triangle, A, B, C, D, E, and you have a thrust out of the triangle, which is a sharp ending diagonal in my view. Now everyone had that view, and there were a lot of Elliott Wave traders, including me at the beginning, who thought we were getting a small correction here and we were going to have another decline. Now, it keeps coming up, the price kept coming up, the price kept coming up, and bearish traders on this, rather than accepting that things have changed, they've taken the bearish idea and they've just moved the bearish idea up. So you're going to have, again, a flat type of correction and then a big move. They're still sticking with the bearish idea. They're not adjusting. So back to the dollar index. That's another reason why I dislike this idea, because in this case, it's bullish. Bullish traders of the dollar who missed the down move here are not adjusting. If you don't adjust, you get stuffed in this market. And the third reason why I don't like the idea of a flat for wave 4, for this idea, bearish monthly divergence. Now, I should go over this in the next idea, but I've gone over this many times. This is a significant issue. I'm going to actually go over this. One second. I'm going to go over this in the next idea, actually. I want to talk about it in the next third idea. But the bearish divergence here is significant. So I'll cover that in just a minute. It's a major issue. So those are 3 reasons why I don't like the idea of a flat. We've already had wave 4. Traders are still looking for a bullish idea, even though it seems to be exhausted, and we have a very significant change in direction. And 3, bearish monthly divergence, which has a history of working. I will show you the 2 major trades I called in the videos here, which worked on divergence marks this year. And I'll cover that now for the third idea. Just one second. Okay, the third idea is one I've come up with in the past 48 hours by looking at other European pairs that are not commonly traded or commonly usually analyzed. And that is that we are in a much more bearish sequence here. Now, this is predicated on the bearish monthly divergence that I just mentioned. So on my charts, how I have the stochastic set up is that when there is a bearish divergence, whether on 4-hour, daily, weekly, or monthly, and it kicks in off of a reversal situation, a reversal price action or candle, the trend runs for 12 to 16 or 12 to 18 periods after. So in a monthly situation, that's 12 to 18 months. I'm going to go over the calls I've already had on this, 2 major trades this year. The first one was in Euro New Zealand on the weekly chart. It was the combination of price action, which was corrective, and bullish weekly divergence. I called this in the early videos when I started to make the videos here in February. If you want to go back and see when I was making the calls, they are there in the February videos. And then my forecast was from 145 to 157, and it ultimately went to 162. My idea was to come up to here, 157. So this was a case where you have a corrective price action at the end of a move here, an end of a corrective move, choppy price action, which is corrective, and bullish divergence on the weekly time frame. Now the pair I've been covering, that was the first major trade I had this year. The second one that I forecast in the videos was US dollar, Canadian dollar, which again on the weekly had bearish weekly divergence here. Now this pair has been more aggressive to the downside. I've covered this a lot in the videos. I know I'm repeating myself, but I want to make it absolutely clear. And for any new traders who are watching these, I want to show the importance of this in relation to the dollar index. Now this has worked, and this has crushed it in a way that even I didn't expect. And I've seen this work out many times in different time frames. It crushed it in a way beyond what I expected. My target on this from the videos you can see back in May was from a trade 137.50 to 124. And this week we made it to 124. The trade is finished. It may extend. It'll probably extend to trend support here. But the trade call is finished. And in my opinion, my trade is finished. So there's no bearish trade here. Look for a bounce of some kind. The reason I mention this is not to say that I called it. It's to show the significance of bearish trends, bearish divergence in following a corrective price pattern at the end of that pattern. Okay, now going back to the dollar index to explain this on the monthly dollar. This was, unlike the last 2 pairs, this was not a corrective sequence. We did not have a lead up like in Euro New Zealand and US Canadian of corrective price action into the divergent scenario. We had a completed 5-wave swing with divergence at the top. Now, in the past, just to go over this a bit more, I mentioned typically it runs for about 12 to 18 signals or blocks, whatever they are, hourly, daily, weekly. In this case, Euro New Zealand is weekly. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15 or 16 here it ran for. US Canadian is still running. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. It's going into its 14th bearish week. So it's in that region where it may find some support and turn around a little. So this happens on all time frames. I often get divergence on a 4-hour block, and when it kicks in, it will run for 12 to 18 blocks, so 12 to 18 4-hour periods. So the idea on the US dollar is that the monthly situation is going to run for 12 to 18 blocks. Now, there may be some type of sideways move for a couple months, but it would extend. There would be small corrections and it would extend. And it would be a essentially relentless crash with small breaks only. No big break like this and then down. So the bearish idea with the bearish monthly divergence is that it's only going to slow down for short periods for a couple months maybe, just like we saw in the other pairs, and then it would continue. So that covers the divergence. Now I want to talk about the other pairs. So just 1 second. Okay, on Twitter last night I talked about these US dollar European pairs. Swedish krona, Czech crown, Hungarian forints, Danish krona, and Norwegian krona. So I'll take them one at a time, and I want to show why I'm starting to get a more bearish view on the US dollar. Okay, you can put in a big three-way move into here. 1, 2, 3, 4, 5. Now, we also have the bearish monthly divergence here, but I'm not going to go over all of these charts have the same bearish monthly divergence except for the Norwegian crown. The reason I'm going to focus on these is because of the counts, because of the looks. Now, in the DXY, we've been trying to focus on finding a wave 3 low in this region, and it hasn't happened. How does US dollar Swedish krona look? It does not look to me like it's ending a third wave. What it looks like to me is that we've had one wave down here, second wave correction, and now we're in a middle third. Wave 1 of 3, 2 of 3, 1, 2, 3, 4, 5, 3 of 3, 4 of 3, 5 of 3, and then wave 4 and wave 5. To me, it's looking like we've got a major crash in the Swedish crown here. There's no signal, in my opinion, that this is stopping on a end of a third wave and we're going to look for a fourth wave. To me, it looks just like we're in a middle third now. So that's one pair that's looking more bearish than the US dollar itself, the DX index. Okay, US dollar Czech crown. This is looking very bearish. Now, I looked at this last night. I'll see if I can remember it. I had it as 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, wave 5 extending possibly, and now we've got also 4 and 5. I think I had it differently than that actually. Yeah, I think I was actually one swing early there. So in any case, this is not looking like it's going to stop. This is looking like it's in a very aggressive middle third wave. And middle thirds are the infamous, relentless, unstoppable, price-pounding third waves that crush anyone who decides to, without evidence, take a position against them in the opposite direction. So this pair is looking much more bearish than the DX itself and Euro US dollars. So next one, Hungarian forint. Similar idea. Wave 1, wave 2, 1, 2, 3, 4, 5, 4, 5. It's looking like it's got a massive collapse, and we are only in wave 3 of 3 here. 1 of 3, 2 of 3, and now we're in 3 of 3. So this is much more bearish than what we've been looking at on the DX and on Euro US dollar. Similar here. Well, you can take this a couple ways. If you take it as 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, 5, something like this, for example. It doesn't have to extend like that, but the point I want to make is that it's looking much more bearish than we've been looking. These pairs all look much more bearish than we've been viewing the dollar itself as. And this pair is a little bit different, Norwegian crown, krona. This pair, unlike the other pairs, doesn't have the monthly divergence. I can count this as down into here. A, B, and 1, 2, 1, 2, 3, 4, 5, 4, 5. Now, that doesn't matter, essentially. It looks like it's done. Now, the issue is here, it is possible that this could find a low. I would have to say that out of the pairs I've shown, this could turn into a three-wave move. But if I'm going to view it bearishly, it's looking like wave 1 here, wave 2, and now we have 1 of 3, 2 of 3, and we're starting 1, 2, 3, 4, 5, 3 of 3, and then 4, 5, and then 4, 5 again, basically. So again, it's looking pretty bearish. For this to stop in this region, it would have to put in a 1, 2, 1, 2, 3, 4, 5, 4, 5, find support here or so, and move up. It's looking quite bearish, not as bearish as the other ones, but still it gives a different view to the DX. Now if we go back to the DX, these are all European pairs. If we go back to the DX and take what we've just seen in the other pairs, which are clearer, like for example, the clearest one of these pairs, is the Swedish krona. This is by far the clearest chart I can see. 1, 2, 3, wave 3, middle third, 4, 5, 4, 5, for example. If we take this type of clear view and we apply it to a messier chart like the DX, it puts a much more bearish slant on this. I mean, for example, instead of looking at wave 3 into here, and then we have to keep extending, then we get wave 4, wave 5, and then a bigger correction. Judging by what we've just seen, we can look at this differently. We can look at this as wave 1, wave 2, 1 of 3, 2 of 3, and then wave 3 is now extending. 1, 2, 3, 4, 5, 4, 5, 4, 5, for example, something like this. This is the bearish monthly divergence crash scenario. It's different because currently I'm viewing it as 1, 2, 1, 2, 3, 4, 5, 4, 5. But judging by the other pairs, it looks just as good. 1, 2, 1, 2, 1, 2, 3. Now we're judging by the look of it, it's got the look of a middle third. This is not a slow market. This is a market that's puking and collapsing and bleeding all down the chart. This is a violent middle third. So it's looking like it's much more bearish than we've been estimating. And that most traders, I feel, at least the Elliott Wave traders I look at and watch, they more than we've all been estimating. And I have not seen this view public in the charts. If you've already seen this very bearish count and bearish view, let me know, because I'd like to see someone else's chart as well on this. Now, taking the same idea and flipping it onto Euro US dollar. Just one second. On Euro US dollar, we also had the bullish monthly divergence. Same scenario there. Now, if you take the same type of idea and that we just saw in the Swedish krona and you apply it to a market like this, we are looking much more like a 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5 market. I mean, this is the insanely bullish view. But I mean, judging by how the market's been, I'm not going to ignore it because there's a lot of evidence in other pairs that the more bearish view is taking precedence, and we have not had any bounce. All news is bearish. There's no evidence that anything is turning around yet. And also, if you look at the stochastics on the weekly, they are insanely up. It's this type of situation where you get them horribly oversold, or overbought, in this case, overbought, and they just keep in this position. It's been relentless. When they sink like this, it can go on and on and on. This is why I use stochastics, because it gives me another view on the market. It gives me an extreme oversold, extreme overbought view that the market is basically in danger. There's no divergence on the daily chart. All the counts keep getting crushed. So anyway, sorry, just to go back to Euro US dollar. It's possible to have a more bullish view on this. Compared to the other charts, it looks like it could be extending more bullishly, and that would suggest that we're not going to see anything more than a small correction. Just like small corrections and then again. Now, how that fits into pound US dollar is harder to say, because so far I'm looking at this as a possible leading one. Now, if we assume this is the end of 5, now this can morph. For example, this week we've got a Bank of England rate, I think on Thursday, Wednesday or Thursday. And so this will move the market. Now, what happens if the dollar crash view actually exists and happens? And I mean, we already have a blueprint for that, or a plan for that in Euro US dollar that it simply extends. In cable here, so far we're looking at a pretty slow-moving type of gyration, which is kind of narrowing both here and here in a bigger way, and suggesting that we're going to actually turn back down. But keep in mind, where did we see this before? Euro US dollar earlier this year. We saw a market like this. We saw a market which was range bound, which was choppy, and then ultimately turned higher, which a lot of traders missed. And I'm referring specifically to Elliott Wave traders who wouldn't change their minds, which is a problem because you got to adjust. Elliott Wave's just a blueprint, or sorry, just a guideline. So we've seen that type of situation before. Now, if the pound suddenly turns bullish and the dollar really, really, really collapses, we are talking a situation where this whole swing here can morph, because I've already got the idea running that this could be a truncated 5 into here for the whole decline being over. And you could take on a view, ultimately, where it's essentially 1, 2, 1, 2, and then we have 1, 2, 3, 4, 5, and we start the big move up. Okay, so I'm not going, I want to make it very clear that this pattern, which currently looks corrective and currently suggests a move down, can easily change into a more bullish count. Okay, I'll repeat that because it's worth keeping in mind with the very bearish view on the dollar and the possibility that the pound is going to pick up even more steam, because it's done pretty well lately. 1, 2, 1, 2, leading diagonal for 1, 2, 3, and so on. It basically, in a sense, replicates the Euro US dollar view, where what originally looked like a choppy correction turned into 1, 2, 1, 2 off. Okay, so if we see that in cable, what I'm going to look at this week is that I'm going to look at this being, it could be an ending diagonal, but I'm going to keep in mind that it could be a leading diagonal. And that if we see a brief correction, and say they're the bank rates on Wednesday, Thursday, or later next week or something, and it's a choppy correction, and it suggests another move up, I'm going to take it. Because I want to see, I'm not going to marry this view. I'm using this view as a guideline for a bearish possibility, but with a bearish dollar view, I want to make it absolutely clear that the most bearish view on the dollar, which is the third one I explained and that I'm starting to prefer based on everything else I'm seeing, if that kicks in, then forget it. Euro US dollars going up, pounds going up, and everything else will go up. Commodities priced in dollars will rise, and the dollar will tank. And it's already tanking. It's already falling apart, but not in a sense that, not yet. Most traders are still looking at this as either the first leg of a decline or just a corrective move in the dollar. So this pair will be very interesting to watch this week, because I will tell you what, I don't know the percentage, but I would guess that 95% of traders are looking at cable and are saying this is going to go down. 95% of traders are going to say this is a corrective pattern, it's going to go down. And I agree, it looks like a corrective pattern, it's going to go down. But if there's a turn and a signal, fuck it, I'm going to take it up. It really doesn't matter, man. It's ultimately about finding the next trade and to be aware of different possibilities. What's more probable? More probable is that this is going to find a high up here and come back down. And then we can judge whether this is leading one or wave 4. But for the bullish view, 1, 2, 1, 2, 1, 2, 3, it's there. And I'm going to watch this very closely because it could turn into something like Aussie US dollar, which we were expecting more. 5, small correction, and it's off. So if something like that happens in cable and the dollar continues to puke, I'm going to take this and I'm going to look for it higher, way above 134, ultimately going back up to Brexit levels, 147. So that's a bit far, but I want to present this view because too many traders are looking bearishly at this, just like too many traders were bearish on this here. Okay, I agree that cable looks bearish here, but I don't want to get sucked into a bearish only view. Now how this works out on Aussie US dollar is harder to say. I don't have a clearer view on this or a clearer possibility on this like I do on euro and pounds. I mean, I've been talking this week about this 5-wave sequence basically ending here. And I think we can see a correction here because I feel 5 waves are done. And then maybe it will go into another bullish up move. Maybe. I don't know. It can also top out here. It's that type of situation where we've had the thrust, maybe it'll come back down and correct, the price will inform us, and then it can go again. Because although I think the local price is suggesting that the first thrust is done, a second, third, fourth thrust can follow after a correction. And so far there's nothing bearish on the weekly. And there's nothing bearish on the monthly. On the contrary, they are looking pretty good. Now, this pair, as you can see on the monthly, it has a history of the 55 EMA, price interactivity issues. So maybe there will be a correction here, but it's open to another move up. So I'm not going to stand here and sit here and say, all right, we've had 5 done, 5 here. It's definitely now going to come down. No, it might only come down a little bit, and then it might suddenly get aggressive again if the dollar pukes. So I am looking for a correction in this, but I'm going to keep in mind that it's likely, I would actually say likely now, it's going to be brief. Like the idea that it's going to come back down here, yeah, it's possible. But for that to happen, either Aussie US dollar would have to, crap the bed, or the dollar would have to get some traction and really turn around. Like really find a footing, a foothold, and make the move up. So Aussie US dollar correction, and then judge it on the price correction if it happens. I think it will. We have a bearish candle here. But there's no divergent situation, so if we get a correction, I'm just going to look at this as a correction, and I'll take it from there. I feel that at least the first thrust out of the triangle is probably done here. Now this pair is the one, New Zealand is the one with the extreme COT position. This has all-time highs. Traders are committed at historic high levels. Well, historic, maybe back to 2008 anyway. The highest they've been since 2008 at least. 36,000 contracts. Net, well, it's gone down to 34.8 this week. But it's one of those COT extremes which suggests there's going to be a correction or maybe a reversal move. Now, it has done enough here. This was corrective, and we're looking at a move here which may be done. Now, I'm going to entertain that, but again, on the weekly, there's nothing to suggest it's finished. On the monthly, there's definitely nothing to suggest it's finished. So at most, right now, I'm going to take it as corrective from here. If we can see a kind of corrective move, like a bullish flag, a channel, there may be another up move in this. I don't have anything in the bigger time frame to suggest it's finished. Now, a thing like this with the COT extremes, it's possible that we're looking at a new trend. I mean, we can say it's extreme, and we can take it as extreme as it's been in the past, but it may be a new trend. And it may be the traders are taking on positions here that are going to be held for a longer time, and that there's a new up move in this, some kind of carry situation going on. I don't know what, actually. You know, all I can say at the moment is that there's no sign yet that the New Zealand US dollar has found a high. I can put a count into this, but I have nothing else to work on. I suggest we're going to get a correction, because technically it's done enough here. It looks like it's basically completed this set up, and if the dollar finds traction, who knows? We may get something more bearish, but right now I'm only going to take it as a correction. So going back to Euro US dollar, my count on this pair keeps getting crashed, and this is another reason why I think it's more bullish than it appears, and the dollar is more bearish than people think right now. My count keeps getting crushed, and I keep having to reformulate. This triangle idea got morphed. We've had 5 waves up. It keeps moving up. What I went over on Thursday's video, in that, okay, we've probably got a high in here, right? For wave 5 of 3, or a larger wave 5, probably 5 of 3. I mentioned on Twitter the next day that I cannot take it as a high because this is not a 5-wave impulse. Some traders can say, oh, we've got 5 waves down here, but the third wave is the shortest. Third wave cannot be the shortest, so it's not an impulsive wave down, and I cannot take it as a high. So it's probably going to be blown through. Unless there's some type of correction or something, it's not an impulsive move down from the high on Thursday. So there was no setup on Friday, unfortunately. Despite the candle here, that didn't work out. Let's see if it turns this week, but it may just be a correction as such. So just 1 second. See if there's anything to go over. Oh yeah, one more thing to go over. Dollar COT position, it's come down to 2,000 minus 2,500 non-commercial contracts on the sell side net. The reason I bring that up, the net figure is minus 2,500 now of large traders, non-commercials. It's because over the past 5 years, every time that the large trader position, or you could say the commercial as a opposite essentially, every time it's come back down to the 0 level or a fraction below it, the dollar index has found a low. Every time. Now, are we going to see that again? Are we going to see history play out again in the bullish scenario, and that we're back to minus 2,500 and basically the 0 level, and we're going to see a bounce? Or are we going to look at a new trend where people keep selling the dollar and it starts to get a lose all grip? I don't know. But historically, historically in the past 5-8 years. It's at this level now where there's a precedent for a turn. So how do you trade this? How do you trade a market that doesn't stop? Let's take Euro US dollar. I was bullish for some of this here. This segment, not looking to be bearish. I was looking for a triangle thrust, kept going. At 117, I don't want to be bullish. We've got the 55 EMA, I've been over this. I don't want to be bullish on this market up here. So how do you trade this? First of all, as I wrote on the dollar, there's no evidence of an end to the current trend from January. Okay, there's no evidence of a low. In Euro US dollar, there's no evidence of a high. We can all put counts on it, we can all estimate, we can all set resistance and support areas. If price doesn't observe them, if price keeps pushing, if price keeps morphing the count, that's how it is. You have to adjust, but there's no evidence that we have a high end. So, first of all, for the flat idea, which was the second one I presented today, or for the first idea of a wave 3 high here, there needs to be evidence. There's no evidence. So, like I said about US Canadian and maybe about Euro New Zealand during the trends, but definitely US Canadian, every 3-wave correction has to be a buy. So even if we do get a small 3-wave correction here, buy. 3-wave correction, buy. 3-wave correction, buy. The US dollar, until it puts in something more important, everything has to be a buy against it. So until the US dollar actually turns around and becomes bullish again, all these pairs like Euro US dollar, every 3-wave correction needs to be a buy. There's no evidence that Euro US dollar is turning down. I mean, look how vertical this is. This is a 3rd wave. This is not anything else but a 3rd wave. This is ultra bullishness. So we have to treat it as such. Every 3-wave correction has to be, so here are the points basically. How do you trade it? 1, no counter trend move without evidence. That is a 5-wave print, okay, a 5-wave impulsive decline, something significant. Just like we had on US Canadian at the very high, people who say Elliott Wave doesn't work probably don't know how to read price action, but I agree with them not to marry the idea, but it works. The impulsive side of it works. 5-wave decline at the top of US Canadian, that was evidence, and a 3-wave correction was the sell opportunity. Now, until you see something like this in the US dollar or Euro US dollar or cable, don't stand in front of it. Okay, you need proof that it's turning. So that's the first thing in Euro US dollar. Which time frame was I on? No counter trend move without evidence. You have to get a 5-wave print first, a 5-wave bearish decline, and then on a 3-wave correction you can look to sell. So no counter move without evidence. That's the first thing as a precautionary thing. Second thing, for the bearish view, every 3-wave correction on any time frame is a buy. That is for the very bearish idea of the US dollar and the very bullish idea of Euro US dollar. So any 3-wave correction like this, for example, if we see this again, it's a buy. If we get a wave 4 here for this segment, it'll be a buy and another move up. So you have to go down to the 1 hour, the 4 hour, and the daily and look for situations like this. In the monthly divergence and the weekly divergence like we saw on US Canadian, 3-wave correction was a sell, 3-wave correction was a sell, and so on. Same with Euro New Zealand, which I covered at the beginning of the year. This was the best one. 3-wave correction following the first 5-wave impulse, 3-wave correction, sell, buy, sorry. Let me see if I can find that, 1 second. I loved this pair. Back in February, this was really dream pair. 5-wave impulse. This is the thing we need to see on the dollar to have an idea that a low is in, or that a high is in euro US dollar. 5-wave impulse, 3-wave correction, the buy starts. And this is what I mean. Every 3-wave correction is a buy. 3-wave correction, buy. 3-wave correction, buy. 3-wave correction, buy. Same thing, euro US dollar. So that's the approach. Did I delete it? Yeah, I guess so. Anyway, so those are the two steps. No contrary positions without evidence, and every 3-wave correction is a buy in euro US dollar. Okay, just 1 second. Okay, so that's it. 3 views. Wave 3 is near a low, 4, 5, and then bigger correction. A flat or a more bearish view. Judging by the look, judging by the ferocity of the move, and judging by the other US dollar pairs, it's looking like the more bearish view is taking its stand and is going to be the preferred count. So all 3-wave corrections are buys or sells depending on the market. And I think that's it. Just 1 moment. All right, one last thing. Contrarian small trader sentiment figures. Very reliable, as we saw. Gold, now 3 weeks ago, found a low, 10% extreme. Wheat, I don't know if it was 2 or 3 months ago, found a low at 11%, moved up. It was at 50 recently, and price found the low. DXY, it was 8% this week. The difference is that this market stopped falling. This market stopped falling and went sideways. This market is cratering out. It's just collapsing. So, a small trader bullish sentiment figure, as valuable as it is for finding lows, as we've seen in the past couple months, it doesn't mean anything if price doesn't take a foothold and reverse. And right now the dollar is not doing anything except puking. Red on the charts, and that's it. So I cannot say that the small trader sentiment contrarian figure is any use now. It was used before in gold and wheat. It's no use right now in the dollar. So that's the bearish view. Now, that's what I think about this. And I think it's more likely than I thought about before. And I think that the monthly divergence is so significant that it's going to see a big crash. Now, if this happens, the funny thing is that if this happens, the traders who were bearish on the dollar, there were a lot of people who were bearish on the dollar and they missed this move, right? They missed the whole upward swing because they were bearish on the dollar. The funny thing is that now, if it's as bearish as it looks, we're going to get such a bearish move that the same bearish traders are also going to miss this move. The market has a way of screwing you, and it's somehow, I can't formulate right now how it does it, but people who are bearish are still going to miss the bearish move, and that's the irony of it. They either get stuck into their long positions, like we have Elliott Wave traders who are looking for wave 4 here, which may happen, right? But right now there's no evidence. They're looking for wave 4. They cannot get over the fact that their bullish idea from here didn't work out. So now they've moved their bullish idea to here. So those people have missed the trade already. And we're going to have other bearish traders who are going to look for bigger corrections, which may not happen, and they're also going to miss the bearish trade. So if this is as vertical as it's looking, just look for a 3-wave correction and a sell opportunity. And I will update this chart, but that's how I see it. Those 3 views, we have to assess it as they come along. And the key again, last thing I'm going to say, let me make it larger. There's no evidence of an end in trend. Okay, so nothing but sells in this. Same as US Canadian. All right, I'll stick everything in the description box. Bye.